Welcome to Tuesday's morning market briefing. There's not a lot on the economic calendar today. Corey Rosenbloom is our presenter, and he'll take us through our morning market briefing. Let me just run through a couple of things. We may have tried this already, but some of us didn't have all the switches turned. Our presentation is for education purposes only. These disclaimer and disclosure documents are in the chat panel. Please read them at your convenience. Remember that active trading is not for everybody. Also, TradeStation has a premium platform customization and setup that will allow you to tailor your trading platform to your own unique needs. Please take advantage of that and schedule that online reservation now. Corey Rosenbloom is not afraid to trade. He's a CMT, a trader, educator, and analyst, and his goal is to create a community dedicated to reaching out to those who have been burned by the market, and many of us are in that category. So, Corey, I want to turn things over to you right now so we can continue on with the morning market briefing. Good morning, everyone.
All right. Thanks, Don. No problem. Thank you for your patience there. Okay, excellent. So greetings to you all, Jim, and my good friend Vaughn here in Southern California, Susan, MG, Rose, Gary, Ethan, Francisco, David, Tom, WS, Jerry, all the people here at the briefing, and all of the ones that are saying good morning, and from around the world, really. Good morning to you in Los Angeles, California, where it's colder than expected. I was in downtown this weekend, and there was actually a freak hailstorm. So I had my car there and just sort of endured a hailstorm in Los Angeles. Not supposed to happen, but it did. So maybe stranger things to come. Anyway, as Don said, there's not a lot on the economic or the even, there we go, on the market docket this morning and going beyond. Russians markets are closed and French markets are closed as well. See more global news, but in terms of American news, just watching the Fed, watching how they do in terms of their last policy decision and some of the speeches that are out this week. But beyond that, do keep a watch on what stocks are doing earnings if you are trading those on a swing basis. We're kind of coming out of the earnings season to an extent. And again, this week does not have a lot of retail sales toward the end. The jobs reports behind us last week. And of course, the Fed decision or non-decision is behind us as well. So the market is remaining at all-time highs. If you are new to this style of briefing, there's three components that we do. We're taking a look at this bigger picture as you're seeing it on the chart now. That's going to set up the trend, set up what we're expecting. And even if you're a little 5-minute chart intraday trader, it's helpful to know where the money flow is going on the bigger picture. And so that clearly is up, 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 bull, bull, bull. And in terms of Dow theory, a triple time frame bullish alignment kind of means your monthly chart, your weekly chart, and your daily chart are all trending higher through positively sloping moving averages, and of course the classic higher highs, higher lows, higher highs, higher lows. So in that context, higher prices are to be expected, and we're seeing them. So in our planning, and for members, I'll go ahead and give you a little chat box there, link to our kind of market briefing and daily commentaries and weekly commentaries as well. It's a full member trial for you at Afraid to Trade. It's the bigger picture concepts. And James, and so James says, how long is a wave 5 in comparison to wave 3? Let's get there. James is jumping the gun. I know, I'm sneaking some Elliott wave in on you. Let's jump into that too. But before we get into Elliott, which is kind of more complex, let's just start with, again, the simple. Higher highs, higher lows. Jumping back to the monthly chart, this is where we are. And so James will come in there here with the 1, 2, an extended 1, 2, 3, 4, 5, 3, big 3, little pullback 4, and this is the 5th. This has been our projection, has been since last year, and it's sort of amazing and impressing, to be honest with you, that it keeps going. So this Elliott nomenclature, the 3rd is always the longest, had an ABC pullback, same thing, a little tiny 1, 2, and 3, 4. So this is where we are, and we're probably, if you want to get into even more detailed with it, into some type of 1, 2, and this is extending a 3rd. 1, 2, 3, 4. This is the 5th wave of a 3rd wave inside of a larger 5th, which means after this tiny 5th of 5th, 5th of 3rd, I know Elliott's hard, we're going to have a 4-wave pullback into a final 5th, which means higher prices, if that is correct, are likely. And for reference, those that are new to Elliott, if you're saying 1, 2, 3, 4, 5 overdone, that can't be the case because this would be the 3rd wave, and that is the smallest, and that cannot be. This must be probably an extended 1, 2, 3, 4, 5 of your 3rd. All right, all the complicated stuff is over. If you stuck to that, that's cool. It just means that higher prices are yet to come, either by an Elliott model or by a just simple Dow theory trend model. So that's where we're going to start our perspective. And we have been looking for this pullback, ABC pullback right here, to about the 20-week exponential. Again, members, if you want to try this out, we're going to let you have a free 2-week trial to the membership for how we plan and structure these things going forward. So we are and remain bullish. Dropping to our daily chart. This was our little pullback. Take the form of a flag or a downtrending channel line. Once that broke last week or week before, gave us an impulse of gap, and it gave us to a higher high projection. We're just about there as the market tests 2,400. So what we look at in our planning is what we call game planning or strategy planning. And in this frame, we're going to frame what happens next in terms of a departure. So trade the departure from 2,400. Dominant thesis, bullish thesis is a breakthrough akin to these things back in the past here, above 22 just about, and above 23. Similar levels, similar strategy. If this market goes higher throughout the remainder of May, trade bullishly because it could extend on higher volume and momentum and internals, those kind of metrics. We are bullish until proven otherwise. We are not making forecasts or predictions. We are just making strategies. So if the market doesn't do that and thus triggers our alternate thesis, that makes us cautious, if not bearish, beneath 2,400. So either way you're doing it, you're not hoping something happens or wishing it happens or becoming emotionally invested in an outcome. You're saying 24 is a pivot. If bulls step in, they probably extend, probably trigger a short squeeze. Bears come out, they lose money, and the market goes even higher. Again, how can that look, or how might that look? Anything prior to these breakouts. Look at 22 and 23 in terms of the S&P. If that doesn't happen, then just like we had the other time, play a move down away from. By the way, we don't talk about it much, but the VIX just hit a 24-year low. That's impressive. That is something to be discussed and to be sort of thought about. VIX, which is your volatility index, inverse market, it's just at a new 24-year low and beneath 10. That is quite impressive. And it just says either complacency or broader bullishness. The volatility itself is not in the market right now. So look at the NASDAQ real quick, how that plays into it. Now, the NASDAQ has shown, as we've talked about in the briefings before, relative strength. What does that mean? That means the NASDAQ has had higher highs or has been persistently higher or is higher than the other indexes. So for example, where the S&P is testing out its little 2,400, which is your prior high, NASDAQ has blown through that with power, gusto, and just impressiveness. With the gap Friday, the last couple of weeks, this has gone up, 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 gap, 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 and you've seen this gap even higher. So it's testing its highs, but it's well above where it was in earlier months, March and April there. Dow Jones Industrials, again, are showing relative weakness, even though it's a good price move, to the NASDAQ, and even arguably to the S&P, because the S&P is back at this high. Level swatching, 21.1 for the Dow, and right now 21,000. Otherwise 28. It's your key pivot point for the Dow. Now, with the second part, we'll brief on the intraday session. So here you see the market testing up and trading higher back toward, this is the futures again, 2,400. And if that is to be the case that it breaks through, this is how it's going to do it. So whatever you're trading, intraday basis or swing basis or ETF, and anybody do a yes or no curious little conversation starter. They just allowed for 4x ETFs. Anybody interested in trading 4x ETFs? Yes or no in the chat box there. Curious to see what you'll say. But nonetheless, as you're setting up your trades, either Terry's like no, Gary's no, Tom's no, TJ's yes, Robin's yes, David's no, Chris is no, who else, etc. Yeah. Jack is like, oh yeah. Susan, no. It depends on the trading style. Personally, I do not. So as Don mentioned, I do a more as you may know, I do a more conservative style of trading. It's almost like a swing trading on the intraday basis is what I wind up doing. A lot of thinking involved for the trades are not just randomly taken or emotion taken. It's a strategy and a plan. ETFs are there, and I have used 2x ETFs in my portfolio and in trading, but I have never used a 3, and I really just, well, I won't say too much. 4 just makes my head hurt. James says, so based on my analysis, does a trader wait for a pullback? If you're already invested, tighten your stops. Yeah, if you're not in a position now, for some reason, if you took profits earlier, and talking the market here, or an ETF, or just in general, if you're not in the market right now, wait for a breakout. So 2 things to do. This is not the spot to get long right now, right here today. No. That is not a trade. The trade's going to be either a breakout impulse, in which case if the market gets above 24, determine if you want to let it go a couple of points, 24.02, 24.03, whatever your level might be, get into a breakout position potentially, put your stop above but beneath 24, and then play a potential breakout surge. Otherwise, we do not get long and we do not get short. Because the market risk, if you're short, is that it breaks up and takes a lot of money away from you. But if you are not long right now, yes, correct, you would wait for a pullback once again, as we did just a few weeks ago or a few sessions ago. So looking at that, correct, not a trade here. We are kind of not neutral. We're expecting a breakup. We're not able to trade that breakout unless the market does give us a confirming signal. And again, why does that matter? If the market goes and makes a new high, that forces a decision point, not just for you, but for the other thousands and thousands of people that are trading this, or the funds, or the quant funds, or those kind of things. And the decision is this: do you get long on the breakout now and try to make more money, or if you're short, do you trigger your stop loss immediately, or do you hold it and hope it's a bull trap? So that forces a decision. Right now, there's not a decision. Therefore, let other people make the market break. Don't be one of the ones that makes it break. Stay out, be neutral until it breaks. Barring that, correct, wait for a pullback. Now, good question. TJ says SPY Forex. I haven't seen. I saw the news release on StockTwits and Twitter and stuff, but honestly, haven't done the research and seen what they're doing. But I think they just approved it, so I'm not quite sure what the Forex will be at the moment. Yeah, TJ, more breakouts fail. Statistically speaking, if you test out these sort of strategies, breakouts have a tendency to fail. You know, a 50% or less success rate in general, in aggregate. That's why I like to wait. So if you've picked up on it, if you know the membership, or if you're familiar with the style, I typically like pullbacks. I like pullback or retracement style methodologies that take advantage of a trend in motion and try to engage it on a pullback to a Fibonacci level, particularly to a moving average, or maybe to a round number, or potentially even a trend line. So I want the market to break, do so on high volume, high momentum, and maybe high internals, and then pull back and get to a key spot that I'm watching. This, by the way, is a new Fibonacci grid. So if you go back, this is a new based on this, meaning this little line right here, if you're trying to trace it down a little bit, was actually right there, right? Was the prior high, the prior low. So this is when I speak about pullbacks, this is what I meant. So from a high to a low, pulling back to our key pivot about 2378. So that was a good little spot to play some swing or intraday reversals. But now that's done because we have a new high. So we drag up our Fibonacci level to compensate or to take into account that new high. So if it looks kind of weird, that pullback level in real time was actually down here, not up here. Okay, yeah, a pullback to an area demand. It's more of a market profile concept. area of demand would be like this, which is your pocket or your overlap. So markets can break. And by the way, if this, I'm actually in a teaching mode right now, but if the market does actually break out, and if you miss the breakout or don't trade the breakout, more times than not, it doesn't usually go straight up. It typically does a retest of the break point. In other words, if it goes from 24 to 24.10, it might come back to 24 and then keep going up. It's a better spot to get in because it controls your risk, which is underneath the breakout. And if it fails and re-enters 24, gets back under 24, that's going to take it back to probably, you're right, this value area or this pocket at about 23.83. All right, let's jump ahead to our good questions. I like the interactivity. Very good. Okay, let's keep that mind going, that interactivity going with our second part of the briefing here, which is our stock. Oh, Rose knows. Stock selection. So type in the chat box for me the stock or the ETF. Please don't type in a 4x ETF. I'm not ready for those yet. I haven't even dealt with the 3x ETFs yet. Just 2x is all I can do. I'm teasing. The chat box there of an ETF or a stock that we'll take a look at. All right. So as we do that, as you're thinking of those stocks in the chat box, this is essentially breadth. It's looking inside the market, inside the Dow Jones. And all we're doing is identifying candidates to trade on pullbacks or breakouts for swing trades. So all we're looking at is relative strength, asking which stocks are at or above their 52-week highs, which ones are at their lows, and is there anything else in the midpoint that we kind of want to stay away from? For example, Coca-Cola, stay away from. It's in the middle of its range. But Apple, I know this is really weird, but just if you're new to technical analysis and to trading, you see this making higher highs and extending and breaking out. Yesterday was a big day in Apple. But, however, this is the concept of that which is strong tends to get stronger, not weaker. So if you find relative strength, higher highs, higher lows, stocks that are outperforming the market, it's a good idea to stay in them, trade them either on an intraday basis or a swing basis, depending on your style. Because, once again, that which is strong and attracting money flow tends to attract it continuously. So Apple, even though it was going up, is going up still. So anyway, keeping that logic in mind, so is Boeing, Caterpillar, and Disney had a bad week there. Cisco, Home Depot, and what else we have? DuPont, Demorge, just a little bit there. On the second page of our scan, McDonald's certainly. Triple M has been consistently strong. Microsoft has been good. UNH, healthcare, and UTX with Visa and Walmart. Those are names to probably focus your attention for possible continuity or breakout or relative strength plays. In other words, if the market does break out, join those names. Do not join names like Exxon. Things that are weak tend to get weaker. All right. Facebook has been a strong stock, getting stronger. And so looking at this, again, setting up our plays in the bigger picture. So higher highs, higher lows, rising moving averages, rising momentum, and had a pullback recently, but that's fine. That's simply how the market works. So this is extended to its weekly Bollinger, way above the weekly 20, about 140, and pulling back. So again, it's good to let's jump these things on pullbacks as opposed to trying to get into this and doing breakouts. So where's the pullback potential? The daily 20-day exponential is about 147. If Facebook ABCs are down, up, down to that spot, that'd be a good little trade potential pivot level of 1.7. Not much going in the last couple of sessions here. It's been flat on the intraday chart and pulling back. So do watch this in your hourly. 150 is a key pivot support. If above that, keep it going, keep it bullish. Is that maybe all you get for a pullback? UNG is your natural gas ETF, which has been flat. Had a nice little rally up earlier a couple of months ago, but right now it's in a trading range. It's flat and non-volatile like the market. So I probably would punt on this one. If you're going to set up a future swing trade, you would probably go short beneath $7, maybe 7.10, 7.20, short beneath and retest out the low at 6.50, 60 or 50-cent move down. Otherwise, I probably would not get long on this until it's above 8. That is a weekly overhead moving average confluence, and also your 200-day simple. So I'd probably let it do its thing between these levels, short beneath about 7 and long above 8. GDX. And the whole thing is downtrending, by the way, so keep that in mind. You're playing for a reversal. If it's above 8, let the market do its thing. Come on, GDX. I'll go and there we go. I was like, come on, back gold. All right, this is a gold miners here, or gold, yeah, gold miners. Gold miners. So gold, we'll talk about just momentarily, has been weak, getting weaker, and in fact surprising us with breakdowns and new breakdowns. Today we're going to see a breakdown in gold once again. So gold miners are not the metal. They are different. They are companies that sort of mine gold, obviously, but they are, we'll see little different patterns. It's going to be similar to what gold does, but not identically. So what's happening here? Peeling off a little bit this morning, again with gold, downtrending, so be careful with this. I want to call your attention to this little pivot. It's about 21 per share. It is sort of a prior high, prior low, and possibly a pivot point again. So if this starts to hold this level, play up through the range. Play about the 200-day simple or the prior high about 24. You do have positive divergences and a good bullish pathway higher, even called the dominant thesis. But if this fails and goes underneath 21, that's going to trigger our alternate thesis, and that's going to trade it down potentially to about 18 or 19 per share, which is your prior low. It's a good little thing to watch there. Southwest, I just flew to Dallas last week or 2 weeks ago on Southwest. It's kind of a good experience. So what's our stock doing? Anecdotes, but still, what's the stock doing? This is an uptrending stock, strong, getting stronger. And in fact, we did a scan. Let's see if I can see the results here real quickly. Yeah, jet airliners. So they're looking in general, JETS is a little global jet index. This has been one of the strongest sectors, strongest subsectors, or strongest subgroups really, that we've been seeing the last couple of weeks. So jets, airliners, that's sort of weird with this whole Southwest thing, or not Southwest, with the United and what else? Delta had a little passenger removal, and even though they're having little moments of bad press and publicity, their stocks are doing well. And that's potentially, or in part, not it's in part due to the low price in oil, has how far it's fallen, how quickly. So it's going to boost some profits there for the airline. In other words, oil goes down, the transportation cost goes down, but lo and behold, ticket prices don't go down. They don't go down quite as quickly as oil, so they're banking the difference. So that's going to help their bottom line and their earnings. That's why you're seeing these things do well recently. Nonetheless, Southwest here is at the upper spot. Had a nasty bearish engulfing yesterday, but this morning's going to have a bullish push. So bullish otherwise, but just like the market, if the market breaks out, probably so will Southwest and JetBlue and Delta and Continental, all that kind of stuff, United. So just watch those names as well. They are in a strong sector, strong subsector right now. And here we go with some leverage stuff. Yeah, 3x. You had to do it, didn't you, Ed? 3x gold miners. So the same logic is going to apply, except with more force and gumption, because this is a 3x fund. And same thing, if this starts to go lower, test out the low. So short, if you want to short a 3x, it's kind of difficult. But anyway, if this does bounce, if you are aggressive and want to make a lot of money quickly, if gold bounces, that may be a spot to do it in terms of gold miners. Schlumberger, kind of go a little bit quicker here. We have just a couple of minutes left. So weak getting weaker. It's not quite maybe. I'm going to check this real quick. I think it may be at a fib. Yeah, okay, cool. All right, so Schlumberger here is potentially, or not, it is, at the 61.8 fib at about 760. So that's a good little spot. If you are going to play a reversal, which is very aggressive, that's something I do not do, this would be a spot to do it. Lower Bollinger Fibonacci level. Look at that. That's beautiful. In other words, what we're doing is building up a higher time frame pivot or turning point or support level with a lower time frame positive multi-swing divergence. If this is going to push up a little bit higher, that's the spot, and you're already seeing it happen. Let's do Amazon and kind of jump into our intermarket before the market opens. Amazon is a strong, getting stronger. Quantify, classify it like Apple or other stocks like Microsoft, where, or Facebook for that matter, that which is strong tends to get stronger. Amazon is no exception to that. Let's look, before we go, to, I guess, this really. Gold, 30-minute chart, downtrending, low lows, probably would have supported here, but failed. This morning, gold's going to push lower in a failed reversal. Did not reverse, broke down. Stocks are pushing up to the high, and oil is pushing away from its low. So is the dollar. So we're seeing movement right now. And of course, treasuries popping down to new lows. So downtrending treasuries, dollar may be reversing up, gold gets weaker, and I'd watch oil for whatever happens next. Bull above 46.50 and bear to keep this thing going as well. It was fun with the briefing. It's always good. This is cool. I like this. It was a good session here. Keep the spirit up. Keep the motivation going. You can do this. It's fun. Be careful, of course, as always. I will see you soon. Then we'll turn back to Don.
After the market closes today. Otherwise, see you tomorrow.